So it's Tuesday morning, 9:14. A self-employed plumber called Dave is sat in his van outside a job in Croydon. He's got his deposit saved, a baby on the way, and a mortgage offer that just got pulled from his bank for the reasons that he really truly doesn't fully understand. Now that guy, Dave, he is panicking like mad. He picks up the phone and he rings a mortgage broker. We're going to call that broker Mike. Now by the following Friday, Mike has saved the deal. Dave has a better mortgage at a better rate. His family is properly protected, and he's got a broker that he will send his mates for the next 15 years. That phone call, that one phone call summarizes the job, okay? Most people have no idea what a mortgage broker actually does. They think for some reason, I don't know why, they think we sell houses. Some people do. Other people think we work for banks. They think we push a button and this mortgages just drop out of the sky. It's absolutely none of that. The real job is quieter, sharper, and a lot more lucrative than anyone outside of this industry really understands. Now, if you're thinking about becoming a mortgage broker, this video is going to save you about 3 months of confusion. We're going to be following this hypothetical broker, Mike, through his week with Dave the plumber from start to finish. Every call, every conversation, every bit of admin. And along the way, I'm going to show you exactly what the job is, who you're talking to, what tools you'll be using, how many clients you're actually going to be handling, what skills genuinely matter, and where every single pound of income actually comes from. This isn't the polished version, okay? This is the real version of the job. And if it sounds like the kind of work that fits into your life at the end, then by the end of this video, you're going to know that. Now, before we get into the whole of Mike's week, let's clear up 2 misconceptions that come up constantly all the time, because we have to bin these before we even start. So do mortgage brokers sell houses? No, we don't. Okay, that's an estate agent. We arrange the finances for the house. A completely different job, completely different qualification. In fact, for estate agents that don't have qualifications, it's relatively different industry. It's financial services, the other is property services. The other thing is, do mortgage brokers work for banks? No, we work with banks, okay? We don't work for banks. Most brokers are either self-employed, working under a network, or they're employed by a brokerage. We sit between the client and the lender, finding the right deal from across the whole of the market, and that's the whole point of using a broker. You get someone who can actually shop around the entire market instead of just being stuck with one bank's products. Now we know all this, now we can actually meet Mike properly. So let's talk about Mike's Tuesday morning, the discovery call time. So Mike is 34, 3 years self-employed. He works from a spare bedroom in his house in Surrey. He's got 2 screens, a coffee, a CRM system open, and his phone is in front of him. He's already done the school run. Diary today is 6 client calls and 2 pieces of paperwork. This is the bit that nobody tells you, okay? The real day-to-day of a modern mortgage broker doesn't look like the bloke in a suit with a briefcase. It looks like someone at their desk, in their house, in joggers, running a business. And when Dave the plumber rings at 9:14, Mike has 3 minutes between his last call and his next one. But he picks that up anyway, because that is an instinct. Answering the phone is honestly half of what separates good brokers from struggling ones. Now, Dave's panicking. Of course he is. He's got a mortgage that now has been pulled because the bank has reassessed his income and decided that his self-employed accounts, they just weren't strong enough. Now, Dave, he is 3 weeks from exchange and completion, ideally. The estate agent is hassling him. His partner is upset. And Mike does what every decent broker does first. He slows down that conversation. He asks Dave what is happening in plain English. He listens. He doesn't pitch anything. He doesn't sell anything. He just listens. But this isn't a casual chat. Mike is running a structured discovery call. He's pre-qualifying. He's framing the work ahead. And critically, he's introducing protection right here on the very first call, not as a separate sales conversation later, as part of the job from the start. The way Mike frames it is simple. He tells Dave, here's what we're going to do over the next kind of 10 days. We're going to sort a new mortgage that actually works for someone in your position. But before we do that, we're also going to look at the bigger picture, because a mortgage without the right protection in place is a liability that can collapse the first time something goes wrong. So we're going to look at both of it together. That's the job. That one paragraph is the difference between a thriving broker and a struggling one. Protection introduced at the discovery call, not after the mortgage offer, not as an afterthought. From the start, brokers who introduce protection late are leaking money from the bucket of their business with every single client. Now, by the end of this call, 23 minutes in, Mike has pre-qualified Dave, framed the process, set up the expectation that protection is part of the work, and booked a full fact find for the evening at 7 o'clock. Dave hangs up and he's much calmer than when he picked up the phone. So now we look at the fact find. See, 7 p.m. rolls around. Dave's on a video call from his kitchen. His partner, Sarah, is sat next to him. Mike gathers everything about their financial life, their income, their outgoings, existing debts, credit history, savings, deposit, the property, family situations, health, failure, plans, all of it. Takes about 60 to 70 minutes. And by the end of it, Mike knows more about Dave and Sarah's finances than their accountant, their mum, their best mate, all of those people combined. And inside that fact find, Mike runs what's called an income stress test. This is the moment that locks that protection conversation properly into the process. The way Mike puts it is everything we're about to recommend is built on the idea that your income stays at least the same. Your deposit holds, your debt stays manageable, and your health holds up across the whole mortgage term. Before I submit an application on your behalf, where I'm telling a lender as a regulated advisor that I genuinely believe that you can sustain this for the next 25 years, I need to stress test the income that underpins it. Now, this is not a sales pitch, that's doing the job properly under consumer duty. See, Dave and Sarah aren't going to argue with that. Nobody does, because it's framed as logical, regulatory, and necessary, not optional. Assumptive language is doing the heavy lifting. The protection conversation is no longer a sale, it's just part of the work. Now, by the time the fact find finishes, the protection conversation has already happened. Dave knows life cover, critical illness, income protection. It'll all be researched alongside the mortgage. Sarah knows why, and nobody is being sold to. Everybody is just on the same page. Now, after that call, Mike spends another 20 minutes writing it all up onto his CRM. Most brokers will have some form of CRM. The most common ones you see is Smarter 365, Acre, there's loads of others out there, but they're going to be there. Every fact find needs to be documented. Every recommendation is justified and every conversation is logged. The FCA requires every case to have an airtight paper trail. The brokers who think compliance is boring admin are the same ones who end up in trouble with their network. Or worse, they can end up in trouble with the regulator, which is you do not want to be there. Now let's move to Wednesday morning, which is about research. You see, Wednesday, 8:30, Mike opens up his sourcing system. The two main ones you see in the UK are 27 Tech and Mortgage Brain, and they compare mortgage products from over 100 lenders and thousands of products. But Mike isn't just researching the mortgage, he's researching the protection at the same time, and this is one of the principles that quietly separates a properly run brokerage from a chaotic one. Mortgage research and insurance research should happen together, okay? They shouldn't be happening separately, not as two separate jobs, both all at once. Now, Mike filters by what Dave actually needs on the mortgage side: self-employed, 2 years accounts, 320 grand, 15% deposit, buying in Croydon, new build, and the system spits out a list of products. The cheapest rate is rarely the right answer though. Some lenders are slow, some are strict on self-employed income, some won't lend on new builds at all, but Mike picks the third lender down because he knows from experience they actually do this case in 10 days, no problem, very easy. Then he's going to open up his protection sourcing, runs life cover, critical illness cover, family income benefit, income protection for both Dave and Sarah. He picks the right providers based on their age, their health, and their occupation. Dave's a plumber, which is going to affect his income protection underwriting, and he pulls together a proper recommendation. Now, by midday Wednesday, Mike has the whole package ready. Mortgage research done, protection research done, and now comes the call that ties the whole thing together, which is the submission call, which is going to be Wednesday afternoon. And this is the call that most brokers either don't run properly or they skip this call entirely, which, by the way, is just criminal. And it's the single most important call for the entire customer journey when it comes to actually closing and getting your income. The submission call is where Mike sits down with Dave and Sarah one more time before any application has been submitted to any lender and presents the full plan. Mortgage recommendations, protection recommendations, reasonings, costs, timelines. He walks them through all of it. Now, here's the bit that really matters, okay? This is where the protection gets closed. Not after the mortgage offer, not after completion, right here in the submission call, before the mortgage application has been submitted to the lender. Because once the application goes in, the client's motivation is going to drop off of a cliff. They've got what they came for. The protection conversations becomes a tacked on sale, and the clients rightly perceive it at this point as optional. So Mike runs it the other way around. He reframes the protection one more time using the bigger picture, and then he says, we've stress tested your income, we've matched the right mortgage to your situation. Now what we're going to do is put the protection in place that makes the whole thing actually safe. And then I'll submit your mortgage application. That's the order. That's how this works. That's assumptive, it's confident, and there's no asking. He's actually telling them. Dave and Sarah agree to life cover, critical illness cover, family income benefit, and income protection. The application goes in that afternoon, and the mortgage application is submitted next. Now, this is the mortgage business mastery, what I call the MBM way. This single sequencing change is the difference between a broker earning 50 grand a year and a broker earning 150 grand a year. Working with the underwriter is the next bit, which is we're looking at on a Thursday and a Friday. So after that application goes in, the underwriter is going to take over. The underwriter is the lender's gatekeeper. Their job is to assess the case and decide whether the lender is comfortable lending that money. Now, Thursday afternoon, the underwriter is going to email Mike and they say, look, we want some clarification on a deposit transfer from Dave's parents. They want a letter confirming it's a gift, not a loan. They also want the date the money landed in Dave's account. This is where the broker's job gets interesting. You see, Mike doesn't want to bother Dave with the technicalities, so he drafts the gifted deposit letter and he sends it to Dave's parents for a signature, chases the bank statement and replies to the underwriter within 4 hours. Dave doesn't even know there was a problem. From Dave's side, everything is moving really smoothly. But from Mike's side, there was an hour and a half's worth of careful work that went into that case. This is what clients are actually paying for, and they don't see this. They see the mortgage, but they don't see the 17 things that the broker had to handle behind the scenes, so they never had to do it themselves. So Friday morning comes around, and the mortgage offer comes through. Mike rings Dave. Dave nearly cries on the phone. Sarah is in the background asking if this thing is real, and the deal is saved. And crucially, the protection is already in place. No awkward call after the fact, no leaky bucket, the job is actually properly done. And this is where Mike's income actually comes from. So now let's stop and let's count it up. On Dave's case alone, Mike has earned a proculation fee from the lender of around £1,100. That's the commission that lenders are going to pay for placing a mortgage. Usually it's going to be about 0.3 to 0.45% of the loan amount. Now the broker fee from Dave, Mike charges $495. Some brokers charge nothing, some charge £1,000. Self-employed brokers in busy markets often charge a fee on top of the proculation fee. And then you have protection commission, north of 1,400 quid on the life cover, critical illness, and income protection that David and Sarah took out because Mike sequenced it properly. This conversation was straightforward and the policies are properly structured for the family. It's not stripped back versions to get the cheapest possible rate. The total on this case, roughly about £3,000, give or take. And here's the bit that compounds. In 2 years, Dave's introductory rate ends and Mike will be back in touch with him about remortgaging. The protection is in place, the relationship is built, and Mike will run the next case in a fraction of the time. Plus, Dave is going to refer at least one or two mates from the building trade who are in the same boat as he was. You see, Mike's client book starts paying him again and again rather than disappearing after that one transaction. This is why mortgage brokering pays, not because of one deal, but because of the compounding. And the compounding only works if the system is built right from the first phone call. So here's Mike's full picture. You see, Dave is one case, and at any one time, Mike is going to be managing anywhere between 20 and 30 active cases at various stages of the process. And some at discovery calls, some at fact find, some at research, some at submission, some at offer, some at completion, some in their post-completion review windows. A full-time self-employed broker like Mike is typically going to handle 4 to 8 new mortgage cases a month with a back catalogue of existing clients coming up for remortgages every 2 to 5 years. Top performers handle 10 to 15 new cases a month with an admin team behind them. And beginners in their first 6 months, they might be doing 1 or 2 cases a month while they learn the ropes. See, the number isn't the real goal here. The goal is consistent flow plus a steady remortgage pipeline that pays you for old clients on autopilot. That's the model. You see, Mike works 4 days a week. He's earning right now high 5 figures and he's heading towards those 6. He picks his kids up from school, he runs his business from a laptop, and he hasn't worn a tie in 3 years. Forget what the job advert actually says. The skills that genuinely matter in this job are these: listening. The best brokers ask great questions, then shut up. The job isn't about talking, it's about listening properly. Framing is another one. Knowing how to introduce protection at the discovery call, how to position this income stress test, how to set the order of the process so the clients trust the system. Framing is the skill that nobody trains, but every single broker needs. And the third one is patience. Cases drag, lenders go quiet, clients change their minds, solicitors lose documents, and brokers who handle that calmly outperform brokers who panic. Attention to detail actually is another one. Numbers go wrong, names are misspelled, documents go missing. One small mistake on an application can delay these cases for weeks and weeks. Discipline as well. Self-employed brokers live or die by their structure. The diary, the follow-ups, the sequencing of customer journeys. Talent doesn't win this game, structure does. Charisma, hard selling, a flash of personality, none of that makes a great broker. The great brokers I work with are quietly excellent at the basics. That's it. See, the real job of a mortgage broker isn't selling. It isn't pushing products. It isn't chasing commission. The real job is being the calm, knowledgeable person who guides someone through one of the biggest financial decisions of their life and protecting them properly while you do it at the right time, in the right order. Half of it's conversation, half of it is process. The good ones make it look effortless, and the great ones build their entire lives around the fact that this job, done well, can give you flexibility, income, and the career that you can run from a laptop for the next 30 years. The job isn't what it looks like from the outside. It's quieter, it's sharper, and it's a lot more lucrative than anyone outside, like I said, understands. And that's why Dave the Plumber is going to send Mike 3 of his mates this year, because what Mike did for him in a week wasn't just save a mortgage, it was build a system around him that protects him and his family for the next 25 years. That's the work. That's the real job. So the next big question is, how does this stack up against other careers in this industry? I said about estate agents, you also have financial advisors. And so I broke that down in this video, how all of these three compare, the differences, the pros and cons, and which one might be right for you. So give it a click.